Good afternoon, traders. This is Chris Buss with Traders Profit Compass with your Market on Close report for Monday, October 19th. Okay, big dramatic day today, guys. What I've done is I've zoomed back out to the daily charts on the indexes to kind of show where we're at with this sell-off today. Here we are in the daily on SPY. And what I've done is I've drawn in a trend line off of the recent low down here at the bottom of our $20 trading range box, brought it up here, and you can see today we had a clear violation, big impulsive sell-off that brought price right back down to our 341.50 area, which is the boundary of our prior trading range. Now, tomorrow and in the days ahead, here's the deal. Anything below, daily closes below 341.50 is a short. When you go back into a major, well-defined trading range, once you break out, you do not want to come back in. That signals a false breakout of all these, candles over the last week and a half. Those would prove to be a false breakout, a head fake, a big one, a dramatic one, but a head fake nonetheless. And if we drop down below this 341.50 area, then the technical target, doesn't mean we get there, but the technical target is the bottom of the prior range, which is back at 320. And if you're holding longs, of course it depends on what they are and how they're performing and all that stuff, but it's very hard for a long to perform if the market's going to sell off 20 points. It's just tough to do. So that sets the stage for the days ahead now that we're back at support. Let's go down and zoom down on our time frames. Here's the 2-hour chart. You can see that we've dropped down below the rising channel that we had off of the low. We've dropped below and we came down and to the penny. Actually, it was past the penny. Our low today was 341.26. So, but it found support there and put in a little bounce. Okay. So again, tomorrow, there's your line, 341.50. Below is a short, and above, bulls get to, are still alive. The breakout is still alive as long as 341.50 does not break. Now, just set aside all that stuff about the stimulus and, are we going to get it? Are we not going to get it? I realize those are the headlines, but you can't really trade on that. You've got to go level to level. And we had said, if you go back in the weekend notes, 347 was a critical level. And once that broke, the floodgates opened right here today. And hopefully you caught some of this move. Now let's go down to the 60-minute chart, and you can see we had talked right here, right around the noon hour, maybe a little, 12:30, 1:45, that this 346 level was going to be really important. Now the 347 level broke earlier in the day, and then we had this uptrend line which held it for a number of hours. But then once this 346 level went, then it was down, down, down. So hopefully you got that, my midday pulse note. And if you weren't aware of that level, the note made you aware of it, and that you were able to capitalize on this down move, which was, a nice one to catch. say you got short here at even 345, 345.50, you got a good $3 out of it. So that was a nice trade. And you can see here, price knows these levels. Came down, tagged it, came down, tagged it again. So that 341.50 is real. We may get a bounce tomorrow up into this 344 area, which will be resistance. Now that support has broken, you know, a bounce up here to 344 would be an objective short, because this is resistance, and now you can set your stop just above and look for a recycle back down towards the lows. And like always, if you get stopped out, okay, you got a paper cut, you know, big deal. But we're in a downtrend now, so I think you've got to lean to the, you know, fade the rips kind of a posture, because any kind of a bounce right here, I think they at least come back to test this level one more time. That's often the case when you come into a level for the first time. It usually holds. You'll usually it'll either, you know, oscillate here right above the level, or you get a bounce and then it comes back down in the following days to you know, give you a double check of that level, make sure it's real, and then there's a much better chance that it breaks on the second try back down to this level than the first try. So all eyes on 341.50 on SPY. QQQ, very much the same kind of deal. We had a low we put in at the bottom of this $20 trading range. I drew a trend line off of that low, capturing these candles, and today we had an impulsive breakdown below that. Now that in of itself is a sell signal. You know, you broke trend and now coming back down. Notice the PPO starting to roll over. We had noted these divergences on the weekend navigator. So at least for now, they're starting to play out, because, you know, we were back up near the highs, but with momentum at a much lower level. That was a yellow flag, not a sell signal, but a yellow flag. Now today, we got the sell signal with the break of trend, impulsive breakdown of the trend, and back down. So let's zoom down to the 2-hour chart. Now, here is the uptrend channel, which we broke today. Okay. We've got a support level here. We talked about this at noon. We've got a support level. We had one at 285 and that broke. Then it came down to this 283 that we had identified from before, and it found support there. Now, we're about $3 higher in relation to SPY from this trading range. Okay. Here, we would need to see a break of 280 to, you know, basically go into gonzo short mode back into the trading range. And that's something to watch for tomorrow and in the days ahead. One thing I always like to see when trading SPY and QQQ, one or the other, is a confirmation of the one you're not trading to confirm the move. What do I mean by that? I'll try and make it a little clearer. Say we get a breakdown in SPY and it goes below 341.50. We just talked about going into the range on SPY, back into this $20 range. But what could happen is the Qs come down to 280 but hold and possibly bounce, that's gonna either slow down SPY or reverse it. So you don't want to get trapped in a false breakdown on SPY if you don't have the confirmation from the Qs. So to make a long story short, the gonzo short moment is when both the Qs and SPY are both back in the prior range. That's the gonzo short moment, when both of the indexes are back in their range. So that's a word of caution tomorrow if we get a SPY breakdown but the Qs don't confirm. That would be kind of a cautionary thing. You can still trade it, you can still be short SPY, but you've got to always keep an eye on QQQ to see if it's going to confirm with a move down below 280. Looking at the 30-minute chart, I mean, this is textbook stuff, guys. I mean, and it really, I can't impress upon you enough if you're, an active trader. And you likely know this already, so I'm not telling you anything you don't know. But look at the levels. This was the prior low. It came down and it hovered there for hours today, trying to decide if it was going to hold or if it was going to break. But once you got that move, then it was, even here there was a hesitation at 286. That was a trade I took today. I got short 286. I should have been short a lot earlier, but that's all hindsight. I got short on the break of 286 and got a pretty nice move down here towards 284, where it found that support on the 2-hour chart at 283. Now, tomorrow on the 30-minute chart, we talked about support at 282. If 282 were to break, then I think you're coming into 280 pretty fast. It's not marked here. I'll mark that by tomorrow, because that's the level of our trading range. So 282 is going to be an important first level for Qs on the downside to see if it can hold. And if it can, that'll probably slow down SPY quite a bit. And I'd be surprised if it broke down back into the trading range below 341.50. IWM, this is the daily chart. It held what it had to hold at 160 to keep this little baby breakout alive. Now tomorrow and the days ahead, anything below 160 is a short, because you will have lost this trading range, and then you're going to be back in the soup down here. So tomorrow and in the days ahead, if you see a breakdown below 160, that's your cue to get short with a stop just above. And then you'll be looking for a move down towards 155, 152.5. We can look at that on the shorter time frames. Let's do that. Here was the breakdown. I actually took this trade today on the breakdown below 162. That turned out to be a nice trade. I covered it a little early. I didn't wait. I should have waited for 160, because I knew that was a technical target. I got kind of flustered and thought they were going to bounce it, and I closed it out a little early. But a win's a win. It was a great entry. It wasn't the greatest exit in the whole wide world, but it came right down to 160, tagged it, and found support. So now tomorrow, if 160 breaks, you can get short, and your first target would be this 158.50 top of the gap, prior low, and if that breaks, then gap fill down to 156.75. So that's the game plan for tomorrow. And if you got a bounce, let's just think about that. Where is resistance on a bounce? Well, it's going to be back up here, right? It's going to be at 162, where the breakdown was. So if you got a bounce up to 162 or a little below, that's where you would put on an objective short with a stop just above, and then look for a double check back down to 160. And hey, if it breaks above, you're out. Simple as that. But with all this action here above and then to break below, that's not a good look, because you've got all this resistance here now overhead above that 162. I really thought this morning, in those first few candles, it was going to break out. I mean, we had yields rising, the dollar falling. That should have been a green light for small caps and value to break out, and it just never happened. And then it pulled away from that resistance level. Now, let's think of this, and let's look at it on the 30-minute time frame. I had drawn this line in, and we talked about it this morning. If you were really on top of your game and you had IWM in the crosshairs, this is a big clue right here. Look at all the time spent where it could not get above this little downtrend line. That's an objective short. If you wanted to give that a shot, right here at 163.60 or whatever it was, with a stop just above, say 164, that would have been a very objective level. And then once you started pulling away, then it was all gravy after that. But whenever you see candles that just cannot get above a certain level, that is usually a good tell, or at least a better than 50-50 odds that you're going to be right in taking that short, against this downtrend line. So anyways, maybe you took that, maybe you didn't. If you did, that was a great trade and a great entry. I waited for this breakdown at 162 that we talked about, and I covered in here at 160.5, or somewhere right in here. I got it on the trade tracker, so you'll see those prices and everything tomorrow, and I'll include that in the morning note. Facebook. We've been honed in on 264 for a long time. I got short on this candle right here, the first one, and then it bounced, came back for a back test, and I took the heat. I stayed in the trade. No candles closed above 264. That gave me a little comfort and a little confidence. And then it finally fell away, and I covered down here around 261. That was a nice trade. But again, look at where it found support. Right at 260, at our pre-identified level that we've been watching forever. Support is support until broken. So now, just like all the other ones, the other setups, if you get a bounce into 264, it's an objective short, with the idea that it's going to come back down, it's going to have trouble breaking above, and then it's going to come back down for a retest of 260 at a minimum. And if there's more selling pressure and 260 breaks, you're looking at 255, which were locations of support way back when, all of last week. I guess that was last week sometime early in the week. So support and resistance, I mean, that's the name of the game, trading level to level. And sometimes they give you grief. I was hoping that this was just going to come down, but it didn't. But price never gave me a reason to get out of the trade, even though I was underwater to a certain degree, because when I took it, we were already below 264, and then when we kicked back, I was down a little bit on the trade, but the structure was still intact, and that gave me some confidence to stay with it. Apple lost 120. We said that was a key level. You could have easily gotten short there. If you did, great trade. Second level was 118. If you got short there, great trade. Came down, filled the gap, came down, made a reach toward 115 and didn't quite get there. That's your next level of support. And if 115 doesn't hold, then you're looking at 113. That is a big level, 113. You can see all the reactions here in this trading range between 115 and 117. If 113 and 117, a $4 range. So $4 range, if you break the low, $4 measured move, you're back down here towards 110, 109. So keep those levels in the crosshairs if you want to engage Apple. Any kickback to 118, I would say short it. That's an objective level on any kind of kickback. Tesla reached down to 430, which was the level that we had talked about that it has to hold. It did that. So going forward, if 430 were to break, that's your cue to get short with a target of 410, because it's coming back into this trading range. It's actually held up pretty well. I mean, all things considered, this could have easily let go a lot worse than that. It's only down 1.6%, and the broad market was closer to 2%. So this 430 is the key, and as long as that holds, the bulls have life. But if it breaks, then back down to 410. Microsoft was a really nice trade for me today. We talked about it in the noon hour. False breakout off the opening candle, which was faded. This would have been a good shorting location. I did not short it until it broke 218, and I was in the 217.50 puts for Friday and got a good move down. Again, I covered it a little early. I covered it around 215. Could have milked it for more, but I didn't. So it came down, reached down towards this 213 support, which is the next key level. As long as it holds 213, they could put in a bounce. If they don't, then I don't know, man. It looks like 205 if 213 doesn't hold. So that's a really big level there. I'm sure it would find a little support in here around 210. Right in here, I'll put a line in there for tomorrow. But once it comes back into this big trading range, like we've been discussing, the target's the bottom of the range, and that's 205. That's a long ways away. Amazon, back-to-back $100 moves. Had a move on Friday from 3,400 down to 3,300. I think is where that closed, even though this bad candle was in there. I think it closed around 3,300, and then this morning reached up to 33.35 and then finished $100 lower. So those have been some massive moves there. I didn't mess with that today, but if you did, that was a great trade. Now tomorrow, 3,200 has to hold, or it's 3,150. $50 increments have been working great in Amazon. So 3,200 is the mark tomorrow. It's got to hold, and if it were to kick back to 3,250, that's where you'd hit it for a short try right there, and then look for a move back down. We had talked about Google, doing relatively better, and it still has because it hasn't come into this gap yet. You can see that it came down, found initial support at the top of the gap, and then reached down and then closed right at the gap at 1530. So that's your line tomorrow. Anything below 1530 is going to favor a gap fill down to like 1510, 1511, something like that. So $20 move, that would be worthwhile if you can catch that. But yeah, I mean, FANG was really weak today. Netflix. Two pretty hard days of selling. We talked about this trade at lunchtime where our friend in the trading room had gotten long against 525. Got a nice bounce back up, towards 542, 543. So we got a $15 bounce out of that. I did not keep track with him today to see if he, closed it up here, but it eventually rolled over. And now again, 525 is your level. Now tomorrow's earnings, so, anything could happen. But it has been really soft the last 2 days. I mean, from 570 down to 530, that's $40, pretty much in a straight line. So tomorrow, should this 525 break, then you're looking at this gap at 518 with a potential fill down to 505. And I don't know, I don't know who knows what, but they're not showing much confidence, heading into the print when they're, selling it off $40 in 2 days. So I don't know if that's general market conditions or people are suspecting or know that there's a problem with earnings tomorrow night after the bell. Vertex, I got tired of messing with this thing. I had a little thesis that this was the low, which it still may be, but we had 2 nice days of reaching up to 226 on both days, and both days it failed. It had a little recovery here at the end of the day, but I closed it and took a loss. And if you followed me, I just, with the market being so weak, I really couldn't see, holding out for a long right here, right now. Now, what I went ahead and did was set an alarm up here at the top of this candle for a potential long, and I recreated a bracket trade, if you will, with alarms at the high and at the low. And if we break out, then we got $40 of upside gap to fill, and if it can't hold 215, then it's down here to 200 and possibly lower. So market conditions kind of got me there, and you know, so I just took the loss, and you know, nobody likes having a loss, but I couldn't see, you know, with only 2 weeks to go and market conditions being soft, you know, just kind of holding that and let it you know, erode away. DraftKings had a bounce off of this 42.50 level. We talked about the IPO lockup being tomorrow. We'll see what it does, but I still like this as a potential long going forward against this key support area, 42.50. This GRWG did a nice job today. It was up 5.6% in a rough market, so that one's looking good. NEO off 3%. You know, you don't like to see something down 3%, but it's holding up after a big run, so I'm inclined to let that go. Now, what might affect that going forward is if Tesla falls apart. If Tesla loses 430 and starts dragging down the EV space with it, we might want to just you know, get out of our November 26s with a profit, and just, you know, possibly recycle back in at lower levels. We'll have to see how that trades. Big C fell apart. I wasn't involved in it, but we talked about that at noon. It went ahead and, you know, pulled way back. If you're trading that, your next support level is down at 91, and have to see what happens when it gets down there. This is one that I want to bring your attention to. It's REGI. What is the name of that? Renewable Energy Group. It's in the hot solar sector, and this is one of the few names that is giving a really nice long entry. If you throw the fibs on this from the swing low to the swing high, you got a nice 50% halfback long entry, and we've got support here right at the 20 EMA at 54 to shoot against. I really like this setup in a good sector. We wouldn't be chasing it. If you look at some of the other names, they're just, I mean, going parabolic almost. This one is having a nice, more methodical run with, you know, pullbacks along the way. I like seeing that. I especially like seeing that when I'm trying to get in a long and all the other names are just like running away. I like this. I really like this halfback entry with the 20 EMA sitting right there. And if you go look at the rest of the sector today in the renewable space, RUN, CSIQ, TAN, the ETF, we went over that this weekend. SEDG, SEDG, all these names have just been ripping, and I haven't found a good spot to get in, but this one seems to fit the bill, and I really like the setup. And, you know, if you look in the space today, really unfazed by the sell-off. Lot of names. SunPower is up, you know, 5%. A lot of 5 and 7% up moves today into the teeth of this sell-off. So I think that would offer us a nice low-risk entry with the opportunity to run back to the highs, basically $10 higher up here towards 66, and that would be a really nice trade. So keep that on the radar for tomorrow. See how things go, and maybe we can take a long there. So that's all the charts I have this evening. A little bit longer recap than normal, but we had a lot of activity today. Quick recap. We got daily sell signals on SPY and QQQ with the impulsive breakdown below trend. Prices at support for SPY, it's 341.50. That's our line. Below that is real trouble. We've got QQQ attacking the range, sitting there at 283, and 280 is our trading range level. So any break below that, with SPY below as well, that's more or less a gonzo short moment. I mean, it doesn't get any better than that, to be honest with you. A false breakout and re-entering a well-defined range, and that range being $20 wide, 2 weeks ahead of an election, a lot of turbulence. I mean, I think that's a short you have to take with a stop just above. And, you know, we'll be open to a whipsaw. But that is as close to a perfect setup as you're going to get on the short side. So that's one where we've got to take advantage of that if, in fact, we do get it. And if we don't, hey, we got better entry points if those support levels hold, you know, with price down, you know, off the highs. We can recycle into some longs if it looks like that's going to hold. So, you know, we gotta play both sides of the street. And, you know, if you're a trader that's not comfortable shorting, that's fine. You can do one of two things. Just step aside, let the selling conclude, and then recycle long when, you know, the coast is clear, when support holds at whatever level. But what you can also do is start getting familiar with shorting. Find your comfort level. Break out the paper trade on your platform and put on a few shorts. You know, buy a few puts on paper trade and get comfortable trading it, because, I mean, that's what trading is all about. Two-way trading, higher, you know, long and short, taking advantage of what the market gives you. And you know, if you go in a long or pronounced down cycle, you want to find a way to participate in that and not just, you know, sit idly by because you're a long only trader. At least that's my opinion. You do what you want to do what you think is best for you. But I think it would be good if you're, you know, an aspiring trader to get comfortable going both ways, because it's a two-way market. Things don't always go up, and then things don't always go down. So you got to be ready to react on a dime. Oh, I wanted to make one other point. I apologize about Tech Resources, TECK. Basically bought the high tick today, and it reversed, and I was a little slow on the trigger of just saying, hey, I'm wrong, get out. But I saw that breakout, and it was a head fake. And I apologize, because I know probably a few of you took that trade. It was, I mean, plain and simple, it was a bad trade. And, you know, the best time to get out was immediately. The second best time to get out is when we did. And, you know, if it recovers, we'll take it long. If value and cyclicals, you know, get their sea legs and climb higher, not afraid to go back in that trade at all. So anyways, hope you got some wins today on the short side, some real clear breaks of support. Those offered some really nice entries. And then from that point on, it was, you know, managing the trade, you know, figuring out where you want to cover, down towards support, etc. Okay. If you're new to the channel, please hit the subscribe button and you'll be notified of, you know, all my content. I'd appreciate that. If you're a long time viewer here, I really appreciate your time after the bell, going over things, getting ready for tomorrow. If you're new, check out the show notes for links to the blog and how to register for my content to get everything that I put out via email delivered directly to your email box. That makes it really convenient and you won't miss a thing. So, and also leave some comments. I really like to hear from you and appreciate those comments, especially if you have ideas on things you'd like me to cover. Certainly happy to do that. Work that into the content I produce, either in the mornings, midday, or on market close. So have a good evening, catch your breath, be ready to hit it bright and early tomorrow as we always do. This has been Chris Buss with Traders Profit Compass. Have a good evening and talk to you next time.